Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 27th of December 2024. First chart is the US dollar index futures. There's a shortened trading week this week with the holiday for Christmas Day. And you'll often find that when a lot of the traders are away from their desks at this point in time and volumes are very low, the significance of the trading is reduced. Price floats around. It doesn't always respect previous price levels. And when the volumes increase again in a week or so's time, you will see price adjust to some extent and begin respecting these price levels once again. So if you see the market not respecting price levels where you expect they would do, just wait until the holiday period is over and you may see price adjust again and then start respecting those price levels once again. Now, the US dollar index futures did close higher this week. It really floated higher on a lack of selling pressure and very low volume. Spread was narrow, the close was a little off its high and below the recent lows. There was no real significance in the trading this week. Price remains within this area here between the highs of the previous range, which was a significant level, and the lows of the range above. There's a little bit of a price vacuum in here where price can move around without much supply being drawn out. Certainly not as much supply as the highs of the previous range down here and the lows of the range above. I don't expect the trading this week was particularly significant. Price just floated higher on low volume and remained below the recent highs, which are here. E-mini S&P. This is S&P 500 index futures. You can see they recovered some lost ground this week, albeit on relatively low volume. It was a shortened trading week, as I mentioned earlier. Highs of the range up here. Price traded within the previous bar's range for most of the week. The recovery perhaps was significant that it was such a strong recovery this week, but there's no attempt to break out. The close was below this week's high. I think the market to some extent did float up, but with a bit more vigour than you might have expected considering the circumstances. I would expect the most likely response here is for a test for supply in response, at least earlier in the week, within this week's range, like this. And then the market will trade depending on how much supply is actually drawn out. US Treasury 10-year note futures. This market was threatening to break down this week. Here's the lows of the current range. You can see the market dip below those lows this week, albeit on very low volume. Once again, I'll just state that this trading on very low volume where price doesn't respect previous levels can't always be relied on once all the traders get back in a couple of weeks' time. The market is attempting to support here on this little juncture here, and there is further support below that down here. At this point, I would suggest this is the market threatening to break down, but it hasn't confirmed a price breakdown at this point. And it could easily just reverse back up and above this level and recover once all the traders are back. So just take this trading with a pinch of salt here and watch what the response is next week. Copper price futures. Copper price futures have been trading sideways adjacent to previous support here for some time now. It's a complex low. You've got further levels coming through like this. The market traded with a very narrow range this week on very low volume. So it wasn't particularly significant. Prices just traded sideways adjacent to previous support, and there's no obvious sign of strength or weakness at this point in time. Gold price futures. Gold price futures also traded sideways this week lows of the range are down here. There's a minor level through there. Price is really trading sideways. You had sort of a mini shakeout last week. You've had a test for supply this week, albeit not a clear one. It was an absorption bar of some sort, trading inside the previous bar's range. This market does look well placed to make an attempt to push higher. That may not come until all the traders are back, so it may just move sideways in the meantime, absorbing supply and building up some strength, and perhaps making an attempt to move higher later once all the traders are back. But it does look well placed to make an attempt to push higher. The weakness that appeared to emerge here hasn't really been seen in response as price moved lower to test the market for supply. So I would suggest that this really can be discounted to some extent now, this potential weakness, and the market does look well placed to move higher. And if that's the case, we will call this an absorption period, a period of absorption where the market moved up, faded lower, tested for supply, and then pushed higher. But just wait to see what the outcome is over the next week or two. Silver price futures, similar to gold, but with a little more volatility. Here's the highs of the range. The market attempt to break out here, wasn't able to when gold prices rolled over and came back. This market was forced to follow. And over the last few weeks, you've seen the market in here consolidating, absorbing supply. It's in the shadow of the highs of the range. Here's the highs of the range. Market just pulls back below those levels. It sees supply drop, and the market can sit back there in the relative safety of the shadow of the highs of the range and hopefully build up some strength and make an attempt to push higher in response when trading conditions are more favourable. Light crude price futures. Light crude price futures are trading in a range, have been doing for quite a while now. There's the highs and lows of the range. The market's trading within that level. The trading above that, the highs would go through there. So you can see the market's pretty much sitting dead in the middle of the trading range, around the $70 mark. This week, price just floated a little higher on very low volume. It wasn't particularly significant. The last two bars have traded within the range of the bar prior to that. So this market really is going nowhere at the moment, just sideways. It's showing no significant strength nor weakness. So wait for a move and then we'll follow that later. Onto the currencies now. This is the Euro-US dollar currency pair. Market traded with a very narrow range this week on extremely low volume. This market has been the weaker of the four currencies I cover here. You can see the market broke down below this level recently, and it's attempting to find support. There is longer term support to the left back here, where the market is trying to find support on top of it. This market's not looking particularly convincing at the moment, but we did get a test for supply today as an inside bar inside the previous bar's range. So there was no damage done this week, but this market's not looking strong. British pound currency futures are certainly not strong either, but are far stronger than the euro. Market is attempting to find support down here. Euro is below this level, but the British pound is sitting up much higher than that, and it's sitting much stronger than that. When this happened, the euro really stretched lower, and this market was much more reluctant to move lower. Price did test for supply this week inside the previous bar's range. Volume was very low, similar to the euro. You can't say this market is looking particularly strong, but it's certainly stronger than the euro at the moment. Japanese yen currency futures is also looking a little weak. The market closed below the previous bar's low, albeit just slightly this week. which is a minor sign of weakness and may suggest the price will continue lower. The euro and the pound both closed up higher than this market has closed. This market closed pretty much near its lows, or at its lows up here. So that was a bit of a sign of weakness. Spread was narrow, volume was very low. I would take it with a pinch of salt at this point in time and just see what the response is next week. Aussie dollar currency futures sitting right on top of longer term support. You stretch right out, you can see that there's previous support in the background back here. The market has moved below this level and broken down past it. It's attempting to support adjacent to this. It's quite a way back in the past now, but that's where the market is sitting right on top of. We come in a bit closer. You can see the market stretched down to that level last week, and this week it's just sat between previous bar's close and its low, and effectively tested with supply on very low volume. It's not a significant move, and I would prefer to wait to see just what the market does in response, particularly when trading normalizes to some extent. When the traders are back, volume's back to normal. We'll just see how the market responds then. Bitcoin futures. Bitcoin futures was really in consolidation and absorption mode this week. Here's the breakout above the important level here. There's the important level around the $70,000 level. Price broke out, pushed up. There was a couple of weeks where the market did move higher, but thrust shortened considerably. Here's the initial thrust. Here's the secondary thrust. The final thrust was very short indeed. And prices then seen some supply drawn out. This will be profit takers who bought down here at a lower level. This will also be people who can see that they've bought in at these highs when shortening of the thrust was taking place and found themselves either underwater or not making any money and decided to get out. And there'll also be some short sales up here for some people in the market who feel that it's overextended in the near term and expecting a bit of a pullback, and that's sort of what they've got. But however you want to read it, there is some supply being drawn out up in this bar here. Look at the volume down here, was very high volume. It closed very low in its range. This is supply being drawn out, selling pressure in the market. This week, the market has traded with a narrow range on either side of the previous bar's close. And this is the market attempting to absorb the supply that's being drawn out. Volume was pretty high considering it was a shortened trading week, and most of the market saw very low volume this week. This market was almost average. So there's still a fair bit of trading going on in this market, and it was a good effort for the market to trade within the previous bar's range and close in the middle. This is a reasonably good attempt for the market to absorb the supply being drawn out and hopefully make an attempt to push higher again in response. So long as the market remains above the 90,000 level, this push higher remains intact. Any breakdown below that level, any clear breakdown below that level, would probably see the market have to come back more deeply and attempt to consolidate. Just back to the US dollar index futures quickly. You can see that the market traded with a very narrow range this week on quite low volume. Price has traded below the highs of the range here and above the previous close. So it was a very narrow range, low volume, likely insignificant, or certainly not particularly significant. It's just floated up there on a lack of selling pressure, and we'll wait and see just how the market trades in response. The most likely response is a test for supply, like this, especially early in the week. But if there's not much selling pressure in the market, you may just get the inverse of that, a little narrow spread up bar, like this. Either way, it's insignificant until this line here is exceeded clearly to the upside, or the market breaks below the highs of the previous range. A clear push below that level would be a sign of weakness and that the market isn't able to punch above the highs of the old range. And a clear break above it would suggest the market's going to move up and challenge the level above. So we'll just wait and see just how the market responds over the next week or two, and we'll probably get a clear indication which way the markets are going following that. Okay, thanks for your time. Enjoy your time off. If you're having holidays at this period in the year, back again next week. Thank you. See ya.